Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 2nd of October, 2018. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The risk sentiment this morning is just slightly off on news. Generally, the explanation is the comments from Italy that they believe that a lot of their currency problems, economic problems, go away if they got out of the euro. And that sent the euro tumbling. The euro is down about 400 pips this morning, 0.34%. It's not too bad. And the pound is down 67 pips. So a lot of, I'd mentioned to others, heavy commentary or heavy news releases on the wire this morning regarding Europe, both Italy as well as Brexit, and also on the price of oil, which has made new highs for the year and has actually exceeded prices going back to around July of 2015 on a price-adjusted basis on the futures. So quite a bit going on in terms of geopolitical, macroeconomic news. Gold's the winner today, up $11, 0.91%. Followed by the Bund, the dollar, the bonds, and the Treasury, the U.S. Treasury note in the end. So clearly, the money flow is into safety today and out of risk. However, the S&P is only down about 3.5-4 points. Not too bad. We did sell off quite a bit yesterday. We'll cover that in a minute. But overall, that's what's on deck. As far as today, what is going on here? Today's calendar. There's not much coming out from the U.S., but we do have Fed Speaker Powell at 12:45 today. Powell will be speaking at the NAAB conference in Boston. And again, pay attention there. Commentary may be taken by the market as a revaluation. Fed Speaker Quarles at 10 Eastern. So 10 Eastern, and then Fed Speaker Powell, 12:45. That's really all there is today. Let's take a look at what was expected yesterday versus what we got. So yesterday, the main expectation, given the gap up, the key expectation was for a push. What is going on here with my whiteboard? Hello. Hang on. I can't draw on my whiteboard here. All right. Sorry, guys. Hang on 1 second. It's strange. I can't draw on the whiteboard. That's not going to be good. Looks like I'm unable to draw, so let's clear it. And refresh. Okay. Sorry about this. Not sure what the story is. I may just need to redo the whiteboard. Just 1 second. Boom. It's really hard to operate for a period of time without some quirky thing happening. La 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 la. Okay. All right. So yesterday, the primary idea was we were opening in a gap. We're gapping above the Friday high, and we are trading just above Thursday's high. And because we're gapping up and we were imbalanced, the expectation is that we're likely to drift down, but ultimately push up. I was looking for a push to 29.42 and a quarter. 29.42 and a quarter, as you see here, is a stock zone. And the expectation is we would potentially push down, but generally leave a gap open. So that's the main expectation. Here's what we actually got. So we had a very clear open auction, up, down, and then up and down to the open. So the opening swing, very clear, 29.3250 to 29.36 and a quarter. And then we broke the opening swing to the upside. So now, put the brakes on any selling and look to the long side. And it just drifted right up to 29.42. Remember, 29.42 and a quarter was the target yesterday. Pull back, consolidate, back to mid, and everything looks okay here for the long to continue to potentially retest that 29.42 area. But instead, it went to 29.40, fell down, and then we had news on SCOTUS. I've marked it if you use the master levels on IRT, which is available to everybody, or the master levels are. Just look at a flex level, look under educators, look for Futures Trader 71 master levels, and you'll see them there, and you can add them to your chart. And they're dynamic whenever I update the update for you. But right here is when President Trump was talking about the nominee for the Supreme Court and in his news conference and about the new Canada-Mexico agreement, and started discussing the Kavanaugh, the nominee, and that he believes that the FBI should do their full job and do a full investigation and so on and so forth. Sounds like they're pretty confident, but market responded by selling. Looked like it was an SOC based trade, and it's likely to drift up, and it just could not drift back up, and instead it continued to extend. And surprisingly, although the markets will do what they do, surprisingly, it moved all the way back into Friday's range, pushed through the 25.50 stock zone, and went to the 22.50 stock zone. 22.50, if you recall, was the all-time high before the most recent high. So we've pulled back to the all-time high, and we bounced off of that and pushed all the way through. If you look at yesterday's profile, we have a neutral day. It wasn't quite a neutral extreme. Did not finish near the close. We did not transition this point of control down or anything like that. My expectation is we were likely going to close somewhere inside of the IB, and we did not. And so what we have is a very blunt profile. There was a bit of balance in the morning, but we started transition with multiple high volume nodes moving down the line with pretty good volume. We traded 1 million contracts versus 1.05, 1.1 million point of control, or the mode for RTH or pit volume. So pretty good volume yesterday, and we seem to rotate more easily to the downside, not so to the upside. That's where this pane comes in. This bottom pane, P-A-N-E, the bottom section of the chart. This is not a MACD or anything like that, as is obvious. It just abruptly stops. But what it does is it tracks rotations based on a 7-tick pullback on the zigzag study. And what you see in the morning is, 1 1/4 up, quarter down, 2.75 up, 2.5 down, 5.75 up, 2 down, 3.25 up, 2.5 down, and then it starts to reverse right here. And then we get 3.75 up, 4.25 down, boom, shot across the bow. Be careful. It's starting to pull back, starting to have a serious pullback. We also saw the delta print lower in this situation. And then we are balanced for a little bit, and then all of a sudden we see that we have an impulse down, an extension down. And what you'll notice after the extension down is now the up rotations are small, the down rotations are larger, 4 versus 5.5, 2.75, there's a little bit of balance here, 3.5 versus 3.75, and then we continue to push lower until the close. This is why I always say, you don't have to trade. It's not like you need to trade price action. You need to trade price action or anything like that. But paying attention to rotations gives you an idea of what the temperament is. It's kind of like taking a blood pressure on a patient. It may not tell you exactly what the issue is, but it may tell you that something's up. And so that's where this rotational study comes in, and that's why I continuously talk about harmonic rotations and knowing your rotations and so on and so forth. So that's the recap of yesterday. By the way, 2250 happens to be also just above the value area from the prior day, which was completely balanced, the value area high. Quite a bit of confluence there. The overnight low pushed through the point of control, 29.19, the MC point of control in the area as well, and pushed into 29.1750. And the way the overnight chart looks is, we're creating this down channel where sellers are successfully pushing to the downside until this morning, until we broke through, and now we're pushing above the mid of the section. It does not look like we're likely to visit this 29.1750, barring any news. Okay, so that's how things currently are stacking up. The volume in the overnight session is the extended hour session is relatively high, 184,000 versus about 100 to 110,000. Note that statistically the overnight volumes is approximately 10% of the RTH volume, fairly consistently. But overall, lately, the overnight volume's been relatively high. We come into 200,000, 190,000, 250,000, and then we end up trading 1 million to 900,000 on the day session. There's, I was having a discussion with a head trader at Convergent that the overnight actually is providing pretty good structural setups, which I've been watching for a little bit of time now, since June, July. I've been observing that the overnight trade has been somewhat cleaner than the day trade, even though the underlying equities are not trading. Just food for thought, nothing you can use today. The high of the overnight session is, I don't see an excess high. I don't see an excess low. I see it pushing above mid VWAP and back into the range. It's my opinion as it stands right now that we're likely to just trade yesterday's range, likely to have an inside day. Here's what things look like on a day-to-day basis with only the RTH session or the pit session showing. So we broke this downward channel, we broke to the upside, pulled back, retested, and then started to push to new all-time highs. We had the 20th and 21st to put the all-time high in. Then we gapped down, and we have been completely in balance until yesterday. Yesterday opened just inside of balance, pushed higher above balance to 29.42, and fell back in and finished with an excess on the top and an excess on the bottom, just on the candlestick, wicks at the top and bottom. But the profile itself shows that the entire range was pretty thoroughly tested, and we are opening basically in balance again inside of the prior day's range. So overall, what we've had is high, consolidate, and an attempt higher. And if we end up pushing this 29.42 and not continuing through 46.50, we're likely to fail back through to 19, and we're likely to correct and push down below the balance and into the 2900s, below the 2900 again. So that's how the big picture's shaping up. So yesterday we attempted to push out of balance and we fell right back in. And again, news flow is pretty much disrupting the normal auction daily, providing us with a little bit of volatility, and that's a good thing. This morning, we're opening at the lower end of the range. We're above the point of control, above mid, as I said, and above the overnight VWAP. The expectation is an open auction in range. I expect a retest of the 25 area and potentially a push through. And then I'm looking for an impulse higher and looking for this to push into 36 again. So I'm looking for 36 to be tested again today. And from there, it might continue higher into the point of control. And that basically resumes the breakout to the upside, and it puts new all-time highs on deck. If you look at other products, the NASDAQ traded very similarly on a relative basis to the ES, but small caps just took it on the chin yesterday. If you look at the Russell, it dropped pretty aggressive yesterday. Also, on the way up, interesting to note, on the way up yesterday, even though all signs pointed to not shorting it, the underlying indices, the S&P 500 breadth, the tick, and so on, just weren't playing along. There was the breadth opened at about 300, and as we're pushing higher, breadth was falling, which means that fewer and fewer stocks were positive on the day, as the fewer and fewer of the 500 stocks on the S&P 500, the blue chips, were maintaining highs or a positive change on the day as the market was pushing higher. It just, I would say, the index movement was not supported by the underlying issues. So, an interesting thing to note just from a kind of a technical perspective. So that's scenario one. Scenario two. These are equal, by the way, could play either way because we're out of, we're trading just below where we balanced yesterday with the key point of control at 29.36 or so. We're below that. The other expectation is we drift up, break the overnight high, test into this 32 area, impulse down, consolidate, and push this low to continue this, what turned out to be somewhat of a trend day down yesterday, to continue that push to 22.50 and then to break into 19, balance at 19, and then put in basically start one-time framing down, what we call one-time framing down, which is putting in consecutive lower highs and bringing us back deep into balance again. And what this will look like yesterday is a failed breakout to the upside. Okay, so the upside push yesterday, the gap and everything was built on the USMCA agreement, the NAFTA 2.0 deal, and then the market basically could not sustain those higher prices, couldn't auction those prices up. It found value lower And so we drifted down and into balance. So we've basically taken that news back, and scenario 2 carries that to its completion. That's what we're looking at for today. I'm way over my time. Hope the explanations clarify where I'm coming from, and you can adapt this to your own plan, to your own approach, so that you can see some positive results in your trading. That's the whole point. Good luck today, and I'll catch you tomorrow. Take care.